So the reality is we've seen rapid and historic rate rises. So we've seen over 11 rate rises from 2022 to presently, where we were at 0.25% to 5.5% at the Fed. If you're on the acquisition side, nobody had predicted that. And that has put tremendous strain on everybody's assets, regardless of the type of asset, if you have leverage on it and you're in the floating rate debt space. Insurance costs are another factor. So we've had 20 consecutive quarters by several 100% of insurance rate hikes. And there are some markets and submarkets where there's no competition, literally no competition by other carriers. So what that allows carriers to do is demand higher premiums than what has been historically average for that market or that submarket. So this floating rate debt, if you're somebody who owns a property and you have leverage on it, which is debt, and that debt is a floating rate, more likely than not, you were asked and have a rate cap put on that. That is basically a hedge between what the interest rates are going to hike to and what they are. And now, for a crazy statistic, think about this. A property, a 3-year rate cap at 3%, like a 3% strike rate for a $100 million property would have cost $98,000 in April of 2019. And now that same rate cap on that same property at the same valuation is $3.48 million. Nobody can tolerate that type of stress. Your business plan cannot tolerate that type of stress. So you need to understand and pivot and be flexible and understand that change happens. So that's one of the top lessons that we learned in 2023, that these changes happen.